Atul Suri, good morning. 8:30 in the morning you've come for a birthday. How nice of you.
Absolutely. Good. You guys called me and it's your birthday. Why not celebrate?
Where is the birthday gift?
How many years have you been on this channel?
14 years. But birthday gift for the
How
channel.
many years have you been on the channel?
I'm been on the channel 14 years.
No, 15.
No, 14 years. 15 years.
You joined before the
how many years you been on the channel? So channel started 14 years ago.
Fair.
Technically.
Was that a trick question?
Yeah, so I've also been there. Where's my birthday gift?
You will get a return gift.
Whatever.
You will get a return gift.
Even
First you come to the party, first birthday gift, then the return
gift. Even I've
gift.
been associated with the channel from day one. So where's my gift?
So the gift,
and I'm a guest.
The celebration is for viewers.
So it's always the guest. Excuse me, let me speak today. As the guest, I guess.
Okay, we'll gift you both the Amazon basic stationery.
Yeah, the stationery that you guys like.
And the channel pays you. This channel doesn't pay me. Gotcha.
The market pays you. I mean, what more do you want?
That's okay. That's great.
And
the
will it be
great.
paying
this year as well?
No, the market's great. I mean, awesome. Yeah, we've been. I mean, for all of us, we have to be really thankful that I think we are in one of the best spaces in this country, the professionally and the way it has been for all of us. So I think we really have to be grateful. We never really planned our careers in this market. We all happened to come in by coincidence, and I guess that coincidence is probably one of the biggest blessings we've all had. Yeah. Then the market's taken us.
Do?
Sorry?
What did you actually want to do?
Well, like all young Punjabi boys, I wanted to be a pilot in the Air Force. And being the only son by 10th standard, my father made it very clear that was not an option. And then, life went on and whatever. Then the marks, which subject, it just colleges.
Navigating charts is equally dangerous. The volatility is equally high in stock markets also.
And there are crash landings as well in at least a few stocks. But most of them have been flying high, and that's your take on the market as well, 15% gains this year?
I mean, I wouldn't say gains point of view, but we've been sharing it with Nikunj, Aisha, etc. that I do see the market substantially higher. See, from time to time, we do have correction, and people come and question and say, whatever. But see, as an investor, ultimately, you have to get the broader direction right. The call that I have to take is, hey, you know what, am I going to be in 30% cash or I'm going to be 99% invested? And I belong to the latter category, have been invested, there have been corrections. So this kind of rally that's happening is not just in India. We look at it very, very narrowly. It's happening globally. You'll notice that it's the S&P 500 is at 52-week high, the NASDAQ is, Japan is, Taiwan is, Korea is, a lot of the European markets are there. Yeah. The only difference and why I think India stands apart is that they're all making 52-week highs, but we are at lifetime highs. And there's a lot of difference between lifetime highs and 52-week highs, because when you have lifetime highs, you're talking about a blue sky. So India, in that sense, truly, as it was in the end of last year, we were leadership, we were breaking out. I think again we are showing leadership, we are showing breaking out. And a market which is whisk away from lifetime highs. So I think that's spectacular.
But the intriguing thing this time around, Atul, is, and we've been often discussing this, that your champions, your traditional champions are completely amiss from this rally. Reliance hasn't participated, HDFC Twins are not doing anything. IT as a pack is not doing anything. It's newer hands which are, taking us to the top. When do you think these heavyweights, traditional heavyweights, are going to begin participating? Because I think that's the push that the index now needs.
That's always the case, Aisha. Yeah. I've been in the market for 30 years, right? There have been bull markets. There have been leaders in every bull market. The next bull market, those leaders underperform. You know why? Because everyone's just looking at them. Everyone's under-owned. There's consensus bullishness. Every bull market has a new leadership, right? And I do think also that post the whole, I think last year was a very big shift globally in the preferences of stocks. I think the trend changed. And I think in India, what really happens and where we are heavily overweight, overinvested, are places like your basic capital goods, infra, construction, defense. These are sectors which have not performed for a decade. Right? They were dead. Nobody looked at them. So the beauty is that they're underowned, they're undercovered, and they're ignored. And there's still, as you asked me, you're still looking at another set of stocks. But the set of stocks that are driving the market is new. And that is the nature of the market. The nature of the market is to sidestep you. It will always be a place where the majority will not make money, or where the majority opinion is stock somewhere else will move. So I think that this is something that we've experienced last year. This is a very big shift we made in our portfolio. It was very painful. The names that you mentioned, we sold last year, and we got into a lot of these engineering, infra, defense plays. And you'll realize that, hey, you know what? Here the bull market is something else. So,
But Atul, by that logic, financials are still outperforming, and financials are the mainstay. 35% weightage on the index, maybe a little more if I look at individual,
Right.
other
Right.
subsectors.
Right.
So financials are the, they in a sense are the propeller, and they've always been very widely
but
owned.
Nikunj, even financials, is such a big universe. Look at the financials that are moving.
HDFC Bank is not doing well.
Kotak. I mean, I don't want to take names because for reasons, but you'll realize. So I have an exposure in the sector, but my exposure is the NBFC space. You'll find that some high quality NBFC names, again, they may be little known, little discovered, less overowned, but I think they become perfect setups, and the kind of earnings that are coming, the quarterly numbers that are coming. So even in financials, what I said, where everyone is looking at overowned and asking questions, actually the action is happening somewhere else. Exactly what Nikunj raised the point. There's action in financials, but not where everyone is invested. There is action. So we, for us, are actually shockingly, controversially underweight the large banks, and we are overweight the NBFCs. And I think that in that space, well, it's all doing great, yeah.
You mean there's a Chola, Bajaj Finance, pretty much on that.
Whatever, yeah,
on
those,
that name.
absolutely, those names, yeah.
My next question is that let's assume that the leadership in the sector, let's say, is with capital goods, defense, railways. But some would argue that these stocks are up 3x, 4x, 5x, even 10x from the COVID lows.
Right.
So while the bull market is alive and kicking, isn't it too late to still ride them or buy them?
Nikunj, COVID lows is an aberration. Okay. So it is great statistically. But let's kind of eliminate that 6 months or whatever. Things went haywire. Okay, they've done well after that. Now go back to the last time these themes and sectors moved. This was between 2003 to 2008. And you'll realize that how these... See, because when this capex cycle or the industrial cycle turns, it's not a liquidity-driven 6-month, 9-month, 1 rally. These tend to be 3 to 5 year business cycles. Because this is linked to the underlying business. I mean, if you look at the whole cap good engineering space, due to 10 years of pain, most companies have been eliminated. The debt levels were so high. You remember from 2008, 9, that was the last time they were saying, so many companies are eliminated. So few players are there. And with the kind of push that is coming from the government, the number of players that are actually going to participate in this are very few. Yes, they will also go for capacity expansion. You'll have a lot of new players, but I think that's still a few years away. Till that doesn't happen, till that oversupply doesn't come in, IPOs and new issues, etc. Till then, I guess these are the very few players and they will, I think, benefit. And as I said, they are underowned. So sooner or later, every fund manager to beat the benchmark, if you're underweight these spaces, if you're in denial, you will at least have to go equal weight.
So that's one space which is a bit underowned at this point of time. What about pharma? Because that too was underowned. Are you looking at that also positively now?
No, not really. Actually,
hospital, healthcare?
Yeah, so healthcare. So I would change that. Again, I'd use another term for that. Is we like healthcare. So we have a very large holding in hospitals. In fact, almost like 8-9% of my portfolio is in hospitals, and we are hugely underweight pharma. So very often, as I said, that the market, the derivatives or the offshoots do very, very well. And I think healthcare, and in that also hospitals per se. I'm not talking about diagnostic companies because I also consider healthcare. We have zero position in that, but we really like hospitals as a space. So I find that there are a lot of spaces that I'll give you. I mean, you haven't asked me about autos. You have these few great auto names, but you look at some of the auto ancillary plays. Yeah. And even in that, if you subsect, because this, when we look at it, there were 100 stocks, and I can only have a few of them, you'll find that those who have an electrical bias in the auto ancillary space are on a different tangent. There are a different bull market happening there. So I think that is really what's happening. So last year was a very big year of reset for us, very big red. Because that's when even the portfolio churned, and that's when those marquee names actually got eliminated, and a lot of these guys have come in, and I think they are doing very well. And as I told Nikunj, that you go back in history, you realize that, boss, when these kind of sectors move, it's not 3-6 months. They tend to really defy on the upside on earnings. You even see the quarterly earnings that these companies put out. They were much better than most IT companies did.
When will you sell them? What would be the trigger point which would say either these stocks have reached Humpty Dumpty level,
correct,
or these stocks are nearing their end of the cycle?
Correct.
Because mean reversion is the biggest truism in the market.
Absolutely.
And ultimately, one day these stocks will peak out.
Nothing is permanent. I agree with you. Nothing is permanent.
Okay.
So
what would be that point?
So there are two ways of doing it, I would think of it. That one is that a lot of people, as valuations go up, prices go up, they tend to trim. And a little trimming does happen for a portfolio manager like me is in terms of reallocation. When you buy a new stock, you find that your allocation there is low, and you do a little bit of things, and very often these winners get trimmed. But the broader question is that when will you exit? I am a trend follower, and my strategy or style in life is never to try to look for the bottom or the top, because theoretically and practically those don't happen. Sorry, theoretically they do happen, but practically they don't happen.
Yes,
So I'm very
difficult to
often, I am a little late in buying and I'm a little late in selling. But the important part is that the meat is in the middle.
Yeah.
And for me, coming to answering your question, that I don't think I'll sell at the top. I don't know the top. Actually, nobody knows the top. That's the beauty. The fact is that when the trends change, and trends will change, two things will happen. One is that the earnings, the trend in earnings will get affected. And number two, that the price and volumes will show it. When that will happen, I don't know. As I said, I personally think, or history tells me, a study of cycles tell me that these sectors or themes tend to be longer than what we are used to the past. That's why I said that you have to mentally get yourself that, okay, it's gone up. That doesn't mean, why fear something that's gone up? The greatest wealth creators in this country, stocks, have been going up and making lifetime highs. They were never cheap. So just because of that, if you're going to feel shy, I think you're going to miss the larger trends.
I'm going to show you a graphic, which is that 14 years ago, what was the level of Nifty, what was the level of GDP, and what has happened to the per capita income of India. And now, of course, for stock markets to grow, the GDP has to grow. But interestingly, one really looks at the data point. The Nifty, well, you're looking at a low base largely because you're coming off that 2008 famous crash. But Nifty has gone from 4,000 to about 18,000. India's GDP has gone from 1.2 billion to about 3 billion, 3.7 billion, and the per capita income has just doubled. Now, markets have not followed that same appeal. Why? Next slide. Look at the number of demat accounts. Look at the number of people who've participated. And that is the true nature of the economy which has changed. The economy may have changed or may have become 2x. The per capita income may have not gone up, may have just doubled, but the stock market have actually become more than 4.5 times. And that just tells you that how the nature of the economy, Atul, is changing.
That's true. And also to some extent, markets are forward-looking. If you look at India and you go back, you look at the demographic story is actually the biggest theme. And it's not just you and me. It's coming to our lips, or we are realizing right now. But a lot of investors globally have realized this much earlier. And you can see it on day to day. Just a side thing. If you travel to Europe, you go to any country, right? You go to a restaurant, there will be not more than 2 or 3 people serving you. The same person takes the order, they prepare the bill, sometimes they go to the kitchen and also cook.
Yeah.
That's the kind of service. You go to any European hotel, you pay 200, 300 pounds, right? There is nobody to even pick up your bags. Even at the check-in counter, even anywhere of that. In India, for that same price, any 5-star available cheaper, you don't have to touch your bags, you don't have to wait for check-in, you're escorted to your room. So what really happens is that I think that some of these countries have kind of peaked. Either you have a better demographic position, which they don't, and they can't just change it in a day, or you allow immigration. They have blocked up immigration or immigrants, and they are not allowing people to come in. So from that point of view, you will realize that this demographic benefit that we are going to have as a country, what we can provide to the world, is what is really lacking here. So I think it's a big play that's happening out, and that is really what makes the big, and that's the kind of numbers that you put out. That's what really makes you optimist. See, 3%, 5% correction, those are part of life. That will keep happening. But I think the broader theme is up, and I feel that hopefully another 14 years.
Atul, we were just stacking up. Nifty was at 43.56 14 years back when ET9 launched.
Right. No, Aisha, the interesting part is that, see, you would say that markets always follow the economy, right? So economy is not 4x. We are less than 4 trillion. So 1.2 trillion has become about 3.6, 3.7 trillion. That's about 2x. Market, meanwhile, is up more than 4 times, which means markets right now are doing much better than what the underlying economy is. Ultimately, markets are a maximum of earnings.
But they're also a forward-looking beast.
They're
right?
forward-looking.
So they're pricing in what the economy would be eventually.
And the construct of the economy has changed. That black economy becoming white, unorganized becoming organized, efficiency kicking in, margins kicking in, and also look at leakages, look at Aadhaar, look at UPI, look at where we stand in terms of in positioning of the economy, dependence. So while you're right that markets are forward looking and economy is headed there and markets have reached ahead, but the difference I think is very, very large. Atul, one space where the price action has started, and I'm sure earnings will also start, is the entire fintech and consumer tech space.
Yeah,
So price action has moved first,
Yeah.
and earnings will follow. Has this multi-year bull market started in some of these stocks?
So again, coming back to my, I mean, I see it, but again, as I said, I'm okay to be slightly late in it, because I want to see
You're
earnings.
still waiting?
Yeah, I'm still waiting, because I feel the juice is still to come. If you look at all the great plays, like whether it's Apple or Amazon, these were companies that were listed for very many years, and they had their stops and starts. It's when the profitability kicked in, that's when the big wealth was created. Case in point is what Warren Buffett and Apple. I mean, it's a case study. A book can be written about it. So I am a trend follower. I will not catch the bottom, but truly I feel that yes, when these companies turn around and demonstrate knowable profitability, there will be more money to be made then. So I would rather sit out these volatile times, when good quarter, bad quarter surprises. Yes, it may happen, it may not happen. But once I know there is certainty of trend in earnings, I think that's when trend in prices goes. And that's when I think the biggest money will be made. So I'm patient, I'm watching, but I'll wait for good earnings to follow, because I never ever compromise on earnings. Expected earnings is something I'm very scared about.
Yeah, right now they're only talking profitability, not showing it on
Yeah,
their
but,
books.
and it kind of stops and starts.
Yeah.
I can't take that kind
It's
of
not a
volatility.
secular linear move that we are seeing.
Yeah.
Okay, let's play a little bit of a rapid fire.
Sure.
We will make sure that the coffee hamper reaches you. But so when
You
do we
owe
hit?
me one.
Definitely.
Return gift आएगा अब birthday gift लाया तो क्या हो गया
14 साल और है.
Oh God. No, so when do we hit Sensex 1 lakh?
I haven't done the maths, but yeah, why not? Yeah, why not? Really, why not? It's just basic compounding. The slide that you showed about GDP, etc. It's going to get there. Yeah, having been in the market for 30 years, I saw the Sensex at around 1,000. Yeah. So
3 years, 5 years.
Thousand.
Okay, I'll be
Oh
specific.
my God.
3, 4, 5.
So that's like what you're talking about is a 50, 55, 60% move. So I'd see that there's no reason why we should get there in about 4 to 5 years.
Nifty this year target?
Doesn't matter. I have been on record of 21,500,
21,500.
which is 15% up from here. Whether it comes in 6 months or 9 months, it doesn't matter. The question is for me.
This is rapid fire, but anyway.
Sorry.
So he's not getting the hamper. He's saying
Not at all.
Let's start again.
Okay, so let's start again. The top multi-bagger idea, if you can give anything for 3 years. One stock.
Let the hamper go. My regulator will kill me.
At least IT or ITC or something which you've been bullish on.
Yeah, ITC is a great stock. It's part of our portfolio, and we think that again in that whole compounding space, it's a great stock. It's something I can sleep at night with, and I think it has multiple triggers. Most people look at it only as a cigarette company, but I think there's a lot happening. I mean, look at hotels as a sector. There's a lot happening. I think they've done amazing work in FMCG space. There's a lot of action happening. So I feel it's a company with multiple triggers, and once the market realizes, the sum of parts will be more than what it is today.
The one sector to be completely underweight?
Shockingly large. At the moment, I'm a trend investor, so I can change very fast. Disclaimer. At the moment, we are underweight large cap IT.
It's not shocking. Everybody's underweight IT.
Oh, really? Okay.
No, banks, I guess. Banks and IT. Banks also.
Large
you're
banks,
very in
banks
large
no.
banks.
Selective.
As I said, we are playing the whole space through NBFCs rather than large banks. Yeah.
Appreciate your time. Thank
Thanks
you
a
very
lot,
much.
guys.
Is he
Thanks.
getting the coffee hamper?
No.
Isha, we'll get even with you for that. Thanks.
It was not rapid, it was not full of fire, you did not give any names, so no.
Sorry, compliance
Birthday
issues.
gift लाते ना मिल जाता.
I tell you, yeah.
But nonetheless, not coffee hamper, but at least we got something out. 21,500 ITC, the quality mid-cap names, defense, industrials, capex, a lot of themes that if you get them right, perhaps you'll get the next multi-bagger idea as well. Thank you so much, Atul, for joining us today.